Hi everyone, welcome back to Beerich podcast. So this is another Q&A session where I have comments from Beerich and Moneypage YouTube videos. So the first question is Reddit stock an option to watch?
I've done a separate video on this, so I strongly ask you to watch that video. I'm sure you can place a link for that video below. You see that video, it tells you what are the situations for Reddit, why Reddit is gone for an IPO, and what are my views on that. I've shared completely in that video, and I suggest you watch that video.
So how does social media company differ from other IT companies?
It doesn't. It's just a business model. But you got to realize social media companies like any newspaper. How does a newspaper generate revenue?
It's from mainly ads.
There's two ways a newspaper generates revenue. One is ads, the other is subscription.
Okay.
You have to pay for it.
Yeah.
So that's the Reddit model is also the same. They have to generate all their revenue from advertisement or subscription.
Okay.
So is it worth investing into that? And is Reddit still what it used to be? You have to decide on your own. What Reddit was 2-3 years ago is very different from what Reddit is today. And what Reddit started as is also very different from what it is today. So the philosophy of the company has morphed. So do you think that there's potential for this to be a company which will generate the kind of revenue where you want to be an investor? That is your personal call. But I've shared more in depth in that video on how Reddit has changed.
Okay.
And the opinion is divided on what Reddit has become. A lot of people have left Reddit who are big people on Reddit, and why they have left also is mentioned in that. And I think you should read it. And also, when it comes to the IPO, you should read the offer document and see if the price they're requesting you to pay, the offer price, is worth at where their revenue stands currently. They've been talking about their revenues for quite a few months, trying to build up for this IPO. And if you remove all the sugar coating on it, I don't see this kind of value in it, but it's your choice.
Okay.
Because right now there's a lot of push in the market where everything is floating. When the market is very buoyant and people are feeling even more positive and there's a bull run going on in the market, everything floats up. That's including even companies which don't deserve to float up. As an investor, that is my opinion. How long will this floating last? I do not know. Because it's like a flush tank. It's filling up with water. Okay. I do not know how big the flush tank is. When finally it reaches the top, someone will press the flush button and all the water will go out. So I do not know. So I don't want to be floating around and catch myself short. I rather have my money in places where I understand the business model and I have a clear track record and a history to see. And looking at the history and the track record and me understanding the business, I would invest into that because there's many options. There are thousands of companies, especially in the American market, where you can invest. Okay. Reddit, they're pretty much doing tom-tom on all the medias and pushing it, which is rightfully so. They're trying to sell it. So it's capturing your imagination and your attention. Like I've always said, stay in your circle of competence. Warren Buffett also believes this, Charlie believes this, and I think it applies to you and me too. Stay in what you know, stay in your lanes, and within your competence, there are lots of companies you can invest. Make sure the price is correct and the value is correct, and try to avoid debt in these companies as much as possible. If you stick to these rules, you're much better off. And I always shy away from IPOs because what IPOs used to be and to what IPOs is today, I've done many videos on that too, it's very different. IPOs were initially for companies to look for funding. Nowadays, IPOs are launched for early investors to exit.
Profit booking.
No, for exit. Let's say you come up with a brilliant idea and I put money and we built the company. Now I want to go to IPO so I can take my money and exit and go for a next company.
The initial investors.
Correct. I would have put $10 into your company. Now that valuation of that $10 has become $1,000. So I have a huge profit now, which I want to scoop out and take that $1,000 which I'll scoop out of you, go put it in another $110 companies and try to scoop some more. So that's what's going on. Like I said, how big the flush tank is, how much water will fill before it's flushed, I do not know. And I don't want to be holding the short end of the straw. So that's my advice. In essence, that's what I've said in that video too.
So this question is from Instagram page of Moneypage. This person has asked, Nifty is at all-time high and gold is at all-time high. Can you make a video on this?
Sure, I can do a video on this, but the long story short is, that's where the problem is. Because usually when you see stocks going high and gold going high, it usually doesn't go in tandem. Gold usually rises much higher when there's a lot of uncertainty. And when there's a lot of uncertainty, that means stock market, people exit the stock market because they're not sure. So what is happening right now in the world is rather confusing as an investor, historically looking. So this is new territory in a weird way to say that, where you see stock market investors having tremendous confidence in all and every company. Like this IPO, they want to put every IPO, people want to invest. At the same time, gold is also rallying. So I've done a video about why gold is rallying. It's just not purely on inflation data, not just on economic data. There are a lot of macro events happening, and gold is seen as a sense of security. And a lot of central banks around the world are accumulating a lot of gold, which we have not seen since the 1960s. So it gives you a kind of a clear idea on what is happening. And the way current situation in Middle East is boiling over, where Israel and US have locked into a wedding which they don't want to be in. They're in so-called shotgun wedding, as they say. The US don't like what the Israelis are doing. The Israelis don't like the way US is pushing them. And in the middle of all this, Iran has jumped into it. Israelis are purposely pulling Iran into it. Some people are saying Iran is purposely pushing itself into it. So the recent bombing of the Iranian embassy and the senior commander dying there has really added what we call the fox amongst the pigeons, as they say. Because Iran is definitely going to react. They have to react. They don't have a choice. It's become a question of pride for them. So how much they react, what they react, we have to see. The US intel is saying it's going to happen in the next few days. So by the time this video probably comes out, something has transpired. And if it's something catastrophic on Israeli soil, you can really expect Biden's hand will be forced into the US doing more than what it's doing right now. And that is going to complicate things for him, complicate things for the world. And this is one of the main reasons central banks are moving more and more towards gold, because there is huge uncertainty. But the problem is people have become very numb. People like you and me who are retail investors have become very numb to all this, because we went through a pandemic and things bounced back.
We saw huge profits, so we want that to continue.
Yeah, and we just want profits. We're not able to see the danger.
No matter
it's like someone going,
coming.
You're not wearing a seatbelt, you're not wearing a helmet, and you're cruising down the road at 140, 150 now. And your car can go to 200. Your car meter says you can do 200. You don't realize you're on a public road, right? You're not on a track. You're on a public road and you're like sipping it. And your blood vessels are pumping and you're thinking nothing can harm you. Dude, accidents happen. That's why they're called accidents. No one plans for it. But they happen. So, like an earthquake. No one expected New York to have a good shake, and it had a good shake a couple of days ago.
And Taiwan also.
Yeah, Taiwan was a regular expected. Taiwan is an earthquake seismic zone. New York is not a seismic zone, historically at least. So it had a good shake, almost a 5. So these things happen. You cannot say everything will be good forever. So your generation that way has a problem, because your tendency to believe nothing can go wrong, nothing can go wrong. It's the core of your philosophy. And I've been there, I understand it. But I'd rather be careful than be caught holding something which I don't want.
So the next question is, if a stock is going to be removed from an index, let's say an example of UPL, index fund will be replacing it with another stock. So what will be the impact of both of the stocks?
Well, index is supposed to be a composite of the best companies, the best of the best. So to enter the index, there are certain rules and requirements to be met. And there's a committee. NSE has a committee, BSE has a committee, which will review time to time and see which companies should be in it, which companies need to be pulled out of it. So that doesn't happen often, the change in the index, but it does happen. And when that happens, the company goes into the index. All mutual funds, which are passive index funds, will be forced into buying that company because they have to meet that requirement. That's what passive fund is. Passive fund is a composite of all the companies in that index. Same way, the company which is forced to exit will have a price correction because they'll be forced to selling those positions, especially if they don't have a requirement to hold on to it. So company which exists will see a price correction going downward. A company which is pulled into the index will definitely see a price correction going upward. And the volume of trade in those companies will also dramatically change.
So the mutual fund index, the SIP index,
passive index,
how will it change?
That doesn't change.
Because the new stock is coming.
That doesn't change. Your unit cost, the index value does not really change. What changes is that individual company going in and out, that changes. But the index per se does not change. That stays the same.
Okay. So this session has helped whoever the person has asked the question. So please keep posting in the comments. If you like this video and found it informative, please share it with your friends. And thanks for watching.
Thank you.